Gold is a major export and source of foreign currency for Ethiopia's landlocked economy. My goodness, that's up 726.27% over that same time period. How about gold? Oh my goodness, 976 times. So it's so very interesting.
Ethiopia's birr is collapsing, but here's the real question. Could this be the first domino in a global currency crisis? Lynette Zang is breaking down the shocking decline of the birr and why it could be a red flag for the US dollar. If you think it can't happen here, think again. Stay with us, because what's unfolding in Ethiopia might be a glimpse into the future of the dollar and your financial security.
And you know, history has a tendency to repeat itself. And one of the things that I find quite common is how the dollar, gold, and silver behave during those overnight currency revaluations. And we have lots of history that shows us this, but we also have some that are in real time. So today we're going to talk about what's been going on in Ethiopia, whose currency was demonetized back in 2020. And following the federal government's recent demonetization policy that exchanges old banknotes for new versions. Because really, if the government can say this is money, they can also turn around and say, oop, no longer money. So that was back in 2020, forcing people into a new currency and those revaluations. But what happened back then? Jewelry dealers in Piazza are seeing a sudden surge in purchases of gold items. So what people are doing is flocking to the safety of gold. We can learn from others. We should take heed about what we're seeing happen around the world. This is just the most current, well, not even necessarily the most current example, but this just happened. So we're looking at the Ethiopia's currency, the birr, plummets by 82% in that overnight devaluation. But they lead the charge in floating their currency. Let's just keep going because this just happened. Parallel official forex rate margins narrow to 10%. Now, I've shown you over and over and over again that the government will suppress the price of gold. Why? Because a rising gold price is an indication of a failing currency. And once you really understand that the currency is failing, you make different choices. You make choices that puts your purchasing power in sound money. What happens is that gap between the black market price and the official price narrows. So that's what they're referring to here. Parallel official forex rate margin narrows to 10%. This is what happens during those overnight revaluations. So you're me. Well, do you think Wall Street is going to tell me? I mean, after all, in the U.S., spot gold is near or at all-time highs, which is actually true all around the world. But we're talking about these overnight revaluations that takes this that has absolutely no purchasing power and revalues it against this that is all purchasing power. And the reason why this is all purchasing power is because it's used in every single segment of the global economy. This is not rocket science, it's just logic. It has, because it's used in every sector, it has the broadest base of demand. That is key in here. So let me just cut right to the chase. This is the US dollar to the Ethiopian currency. And this is over a one-year time period, and it's gone up over 100% because of that devaluation. Oh, well, you say that's not too bad. Well, how did silver fare? Oh my goodness, same one-year time horizon, instead of up 100%, it's up 156% as it moves toward its fundamental value. We're not there yet, but it's moving now toward this. And how about gold? Oh my goodness, 163, almost 164%. So it's easy to see in these overnight revaluations on a short-term basis how spot gold, the manipulated market, moves up to more near its fundamental value. It's not there yet because globally on average, this will happen 3 times. But it could happen more than that, like in Zimbabwe or Venezuela, who are on their 6th iteration of new currency, and it could happen less. We won't know that yet. It's all about confidence. And this one is global. But I think it's a great example because this is a pattern that repeats 100% of the time. And frankly, when something happens 100% of the time, they want you to think that this time is different, but it's not. So let's take a longer time horizon and let's look at what's happened to the dollar versus the Ethiopian currency over 10 years. Well, wow, it's up 457, almost 458%. You go, well, that's not bad. It managed to preserve a level of purchasing power. Yes, it did. But how did silver do during that same time frame? My goodness, that's up 726.27% over that same time period. How about gold? Oh my goodness, 976 times. So it's so very interesting when people are talking about the gold and silver ratio and all of that. When that's what you're looking at, what you're really saying is, I'm going to trade it in. But do you think anybody in Ethiopia would want to trade in with those gains, 700, 900% gains? Are they going to want to convert their gold into those Ethiopian currencies that are losing value so rapidly? No, they're not. It is about function. It is always about function. What are you trying to accomplish? Silver for me is about barterability. Gold is for wealth preservation and opportunity positioning. And that even goes into the future. And their central bank, look at this. Ethiopia's central bank changes gold pricing to align with market rates. This is what happens. So why would you believe Wall Street? Why? There is no good price discovery. It is purely a trading market. This is not for your benefit. This is for Wall Street's benefit. Don't believe these lies, but it is when they start to do those overnight revaluations that you will begin to see gold and silver move toward their fundamental value. And there are parts of the strategy that, again, is just based on history. Gold is a major export and source of foreign currency for Ethiopia's landlocked economy. The central bank is a large buyer of domestically mined gold, which it stockpiles and sells internationally. But when they're buying this mined gold domestically, they are paying in Ethiopian currency, which is devaluing. When they sell that out in the open market, they are getting global market prices. If they have to buy it in the open market, they are paying the premium to how much they can buy it for domestically. So much better deal for them to buy it domestically. There are all different ways that we can talk about confiscation. This is one of them. They just don't use that term because they don't want you to understand how vulnerable you are. Frankly, and we'll be talking more about this in future videos, this is why I personally like the collectibles, because they are in a completely different category than just bullion gold is. And I want to have that level of protection. So, if you're sitting in bullion, you have hopium because they go, oh, that can't happen again. They would never do that again. How can you be so sure when all of the confiscation laws are still on the books? I'm doing a video on that. That's going to take me a minute because it's very in-depth and detailed, but I'm going to show you why, so you're not really questioning it.
The collapse of Ethiopia's birr could be the start of something much bigger. If you're concerned about the future of your wealth, now's the time to stay informed. Subscribe, hit the notification bell, and share this video with others who need to understand the signs. Lynette Zang will keep you ahead of the curve with the insights that matter. Stay sharp, stay prepared, and we'll see you in the next video.